My name is Paul Wallace. I'm the Africa editor of The Banker magazine, and I'm here with Admassu Tadesse, the president of PTA Bank. Admassu, thanks very much for joining us. In the last year or so, or in the last 2 years, one of the things that you've been doing as head of PTA Bank is pushing to get new shareholders into the bank. I just wondered if you could explain briefly why you've been doing that, and also what the progress is, what sort of countries and entities you've been speaking to, and how that's going.
Well, the bank concluded its previous 5-year strategy in 2012, in December 2012, and we launched our new strategy January 2013. And as we did that, we looked at our environment and we asked ourselves, what do we want to achieve over the next 5 years? And what was very clear is we have had a great run over the past 5 years, and we feel we've got a formula now. We know how to do very good development finance business. We know how to do good trade finance business, which is a very large part of our operation. We've built up a balance sheet now of close to $3 billion. We have a return on equity consistently now above 10% on a dollar business for, again, over 5 years. And so we felt that with this formula, with this track record, it's time to scale up a little bit more. And so the shareholders of the bank increased the authorized capital of the bank from $2 billion to $3 billion. And at the same time, the shareholders felt that the time had come for the bank to start sourcing capital from institutional sources in addition to sovereign shareholders. So the existing shareholders have exercised their rights to increase the capital shareholding themselves. So they've increased their share capital themselves. But at the same time, they realize with annual growth rates of close to 30% per annum, the existing capital and the sovereign capital is not good enough. We need more. And so they've given us a lot of support as we've looked to innovate. We've looked to reach out and bring on board new capital. And the targets that we've put our sights on is pension funds, sovereign wealth funds, and insurance companies. And then, of course, selectively other development finance institutions that we feel have a lot in common with us, have a lot of alignment with us in terms of our outlook. And so we've started with African institutional investors. So we've looked at pension funds within Africa, we've looked at insurance companies within Africa, reinsurance companies as well. And there's also a number of sovereign wealth funds in Africa that we're talking to at the same time. And we've had a great run. Our first year, we managed to raise about $35 million of new institutional capital into the bank. And we had our first pension fund to join us, the National Pension Fund of Mauritius. They bought $10 million of shares. And then we had two insurance companies that followed on that in Q1 of 2014. And then we had a reinsurance company follow as well. And this year we're looking at another 3 or 4 institutional investors to come in. It's still something we can't say much about, but it's a combination of more insurance entities as well as pension funds from within the region. At the same time, of course, with the success we've had, a lot of offshore institutional investors have also started to look at us. So we've had discussions with 2 institutional investors in the Gulf region and also in Europe. And we are also having discussions with a couple of Asian investors. So it's a very mixed bag, and we're starting from within Africa itself.
And PTA Bank covers a large swathe of Africa in southern and eastern Africa and northern parts of the continent as well. It covers about 18, 19 countries. Those countries taken together form one of the fastest growing regions in the world economically. Are you seeing plenty of demand and rising demand for your products?
We are seeing a great deal of demand, and clearly it's a region that is growing very fast. As a financial institution, you reflect that growth through multiples. So typically, as a financial institution, you grow a few times the rate of growth of the economy. And so we are seeing a lot of demand, and we're seeing a lot of interest, partly because a lot of project promoters and enterprises in the region, they know we have track record. They've seen us move. We move fast. We're very customer focused. We understand innovation. We support innovation. And we're very responsive. And I think in a very fast-growing environment, you're expected to be dynamic and responsive. And time is a key part of the whole equation. And we work hard and we work fast to understand our clients and help them achieve their objectives.
And just lastly, you've spoken about how you would like PTA Bank to become investment grade one day. It's rated just below investment grade by Moody's and Fitch. Firstly, could you just tell us what the importance of being investment grade is, and also why do you think PTA Bank should be investment grade?
Well, we have begun to systematically tap capital markets around the world. Through the Eurobond markets, of course, but we're also tapping in our own region, in Kenya and Uganda and Tanzania. We're looking at Rwanda in the future and elsewhere as well, such as Mauritius. But we've had two very good runs now with our Eurobond issues, and they're trading very well in Luxembourg, and we've managed to attract a very vast range of shareholders, or bondholders, I mean, and it's been very successful when you look at the oversubscription levels, when you look at the downward pressure that's being exerted on the pricing of our bonds. They're trading at premium right now because the performance of the bank continues to step ahead. But one thing we've realized is to continue raising capital internationally as well as within the region. There's a number of institutional investors who buy bonds, but they have investment policies that require them to buy bonds of institutions that are at minimum investment grade rated. So we are quite happy with the mix of shareholder or bondholders that we have at the moment. Cuts across virtually the whole world: Latin America, the United States, Europe, of course, Asia, the Middle East. Even Africans are buying into our Eurobonds. But we realize that there's many more out there who are interested, who've expressed interest, but have said they have limitations in terms of their investment policies. So essentially, it's about reaching a wider pool of institutional investors through into our bond issuing program, which is going to continue to grow over time as we grow ourselves.
Admassu Tadesse, thank you very much.